Good morning. I'm calling today when you take everything out of the number. Okay, now everybody's talking about a December rate hike, and I hope you remember you heard it here first, folks. So I guess the question now is cuánto, how much? The answer is so silly and so ridiculous that I want to cry, actually. So when, not if, there's a rate hike, and I think there will be one between December and January. See, I'm hedging my bets now. Depending on how much of a Scrooge Janet Yellen and the Fed board governors want to be. I don't see more than 1/4% increase. Yeah, 1/4%. That's what all the hullabaloo is all about. And, I think Yellen is trigger happy, and I think we have to exercise a rate increase out of the markets, period. Any questions? I don't want to make light of the fact that a 1/4% increase is actually huge, because the current Fed funds rate is, at 1/4%. That is the rate that sets the prime rate, which is the rate which leads banks to set mortgage rates, which is the rate that decides the fate of the economy in many ways. So it's probably not a bad time to raise rates then, with a possible hard winter approaching and the housing markets freezing up a bit, so to speak. And of course, last week some business newsmakers reported a rise in mortgage rates in advance of the Fed's decision, and the rise in the mortgage rate was, about 3 basis points. Panic time. Anyway, the unemployment report on Friday, with an increase of 271,000 jobs and an unemployment rate of 5% from 5.3, the markets traded accordingly, with Treasury yields soaring on Friday. And traders are betting on a December increase, and they're also betting that there will be an additional increase in the spring. But we're told by market geniuses that inflation is not really a concern, because if you take out energy and food prices, the basic rate is still below the Fed's target of 2%. Yeah, right. So don't eat and don't heat your homes. Although I have to admit that our homes will be cheaper to heat this year. Because in case you haven't been to the market this year, I, for one, have seen a pretty dramatic increase in food prices. So I'm going to award the Quote of the Week prize to my old friend Victor Polsi, who said once, quote, "If you take everything out of the number, there's nothing left," unquote. Go Victor. Because, number one, there are the so-called missing millions of unemployed, those people who left the labor market and are not looking. And then there are those who have not actively looked for the past 4 weeks, folks. Yeah, 4 weeks. Counting all those in, we stand closer to a 10% unemployment rate. Confused? Yeah, I am too. I'm a skeptic and I don't believe in anything anymore, except of course in Santa Claus. And so we wait to see if Yellen and her elves are waiting in the wings to ruin our holidays. And come to think of it, it could be that the Fed is waiting to see what we consumers do for Christmas, and if we spend some of our gas money on toys and stocking stuffers. Remember, as I said last week, and I always say it, I'm not an economist, although I know that the textbooks say that you should raise rates when unemployment hits around 5%. And all those people that decided to call it quits and not even look for a job? In the meantime, the IMF lowered its global growth estimates for this year and next year. And they cite a slowdown in emerging markets driven by weak commodity prices. There's a guy called Niels Medegaard Andersen. I have to look that up. He's the CEO of IP Møller Maersk, which is the world's largest shipping line, handling about 15% of all global trade. 15%. He says the number, the IMF number, is way too optimistic. And they should know. They ship it all. Ouch. And, let's not forget about China, which continues to kind of hobble along, reported a drop of imports of close to 10% last month versus 20% the month before. So an improvement. And I also hate to say that the sun is not shining over Europe this year. The migrant crisis is deepening, and I'm personally hoping for a warm winter as the cold weather approaches. Despite Germany's so-called open door policy, many other nations are shutting down, unable to contain the masses, and even some cities in Germany are struggling. David Cameron threatens to leave the EU, and it's all about the migrant crisis. So, are some rats deserting the sinking ship? Stay tuned. The fact is, I'm feeling that the global economy is very tender, and I'm starting to think that it'll take a lot more than cheap talk ballast to keep this ship afloat. And remember, going back to the markets, better subjects. When I told you a few weeks ago that the answer to investing was in the clouds, I guess I could have been a little more specific, but then it wouldn't be me talking. The cloud wars are heating up with Amazon, yes, Amazon appearing to beat the crap out of everyone else. Amazon Web Services stands at a $7 billion business today, and it's on track to be a $50 billion business by 2020. Wowzee! And did you see Amazon earnings last week? Well, I'm running out of time here, so I don't want to bore you with market details. As you probably all know, that all the indices sort of ended up last week, despite of it all. Janet Yellen has a chance to shake the markets again this week. I think on Thursday she speaks at a Fed conference. And we should look for further signs of growth or weakness in the economy with, I think, retail sales and consumer spending, consumer sentiment on Friday. Stocks I'm watching? Well, interesting. On November 4th, the Mexican Supreme Court made a landmark decision that individuals should have the right to grow and distribute marijuana for their personal use. And the ruling may well pave the way for eventual marijuana legalization in Mexico. That would be really interesting. And in Illinois, yes, Illinois, today marks the day where 5 or 6 medical marijuana dispensaries will open their doors. Except for the one in Peoria. Yeah, Peoria. I love Peoria, actually. It hit a little bit of a snack. Peoria? Really? That just says it all. Well, thanks for tuning in today. This is Lily Nealon, Abroad with a View. Talk to you next week.